that Bitcoin is mathematically metered to top out at 21 million units. And if you look at most of the supply, we're at 18.5 million units, I think, are out there right now, Bitcoin. 14 million of those are illiquid. People hold on to Bitcoin. So if we now have this institutional investor base moving more aggressively into Bitcoin, yes, I think a lot of people have been surprised at how badly Bitcoin has done in this environment. But what has happened, especially since we first started doing our research, a lot more investors have become involved with it, traditional and hedge fund investors. And so, in a risk off environment, which is what inflation and higher interest rates has meant over the last year and a half, in a risk off environment, Bitcoin, especially this year, has succumbed to the significant deterioration in most asset classes. I mean, this is the worst bond market, believe it or not, since 1788, more than 200 years ago. We've never been in this bad a bond market, certainly through the first half of the year. The stock market, worst through the first half since 1970. And Bitcoin was doing well until last November. It almost hit 70,000. Now it's down to the low 20s. And yes, our confidence has increased, believe it or not, in our price target. One of the reasons is the partnership between BlackRock and Coinbase. We're seeing the traditional investment firms really being pulled by their clients into supporting or providing an infrastructure for institutional investing in the space. And by our estimates alone, if institutional investors put 2.5% into Bitcoin, that would more than double the price right now. We think that that's just one use case, though. If you look at emerging markets, which are being terrorized by inflation right now, talk about collapsing purchasing power. While 70,000 to the low 20s is a very big correction, what it does not change is the fact that Bitcoin is mathematically metered to top out at 21 million units. And if you look at most of the supply, we're at 18.5 million units, I think, are out there right now, Bitcoin. 14 million of those are illiquid. People hold on to Bitcoin. So if we now have this institutional investor base moving more aggressively into Bitcoin, at the margin, the supply relative to demand, there's I think only 3 million in liquid supply. At the margin, I think it could drive the price up much more than the doubling I've said, just because of that imbalance. So our confidence has increased in that forecast for 2030. Well, it's a very interesting market. The average Japanese investor, retail investor, is older, 50s, 60s, 70s, 80s. They live a long time there. And they are very conservatively positioned in cash and bonds and conservative stocks, maybe high yield, dividend yielding stocks. That's about 95% of their portfolios. But then for the other 5%, they tend to swing for the fences. And they are very thematic. They love technology. In fact, most people do. I find it surprising that we believe that the Japanese DNA in terms of investing is very much like ARK's, certainly for that 5%. But their appetite for technology and also the way their educational system has been set up. If we look at some of the biggest breakthrough in genomics, Professor Yamanaka at Kyoto University, pluripotent stem cells, discovered them. I mean, that's huge breakthrough. Cloud computing, they were some of the first to embrace because they're resource constrained in terms of energy. They're big into energy efficiency, battery technology, and likewise because they have an older demographic. The population is aging very quickly. They've been the first to embrace robotics in a very profound way. So, they're inherently drawn to innovation to solve some of their problems. And that's why they love what we do. Well, it is noise, but our clients want to understand how much we understand about the backdrop we're facing. And so, yes, we believe we're in a recession. 2 consecutive negative quarters of real GDP growth is one. 3 consecutive months of leading indicator declines is another indicator. Employment, I know everyone's focused on that. Non-farm payroll employment, very strong, surprisingly strong, but it is always a lagging indicator compared to the household survey of employment. So going household by household instead of company by company, because that captures more small businesses. Those employment numbers are negative on average over the last 4 months. So we think we're in a recession. But what does that do to our research? Nothing. What does innovation do? Innovation solves problems. And starting with COVID, major problems. And the genomic revolution, big part of helping us get over that problem to the extent we have. And then on top of that, supply chain issues. And then the war in Ukraine. All of those are problems. And now we have a recession on top of that. Innovation solves problems, and so it gains more traction during tough times. And so what we do is double down on our research and assume that some of our trends are going to be turbocharged here as the global digitalization of work and life generally has been, as the search for a vaccine has been. Now with energy and food prices skyrocketing, even more important to move towards a substitution for oil and to use the genomic revolution to create, better yielding crops in less fertile areas than the Ukraine. So, if anything, it increases our confidence in the innovation, the 5 platforms around which we have built our research. Absolutely.
I want to jump to some non-investing or personal, professional related questions, Cathie. But before I do, this is something I've always been curious to know. What has been your best and worst investments in your career, whether it be at Ark Invest or prior at Capital Group?
Best investment is Bitcoin. I remember when we first did our work on Bitcoin with Art Laffer, my former professor. I remember saying that it was $250 at the time. And we were doing this white paper. Chris Berniski was our analyst at the time. And when we got to through the white paper with Art, I looked at him and I said, oh my gosh, it can serve the 3 roles of money. It could. It's already serving as a store of value, but how big could this be, Art? And he said, well, how big is the US monetary base? This is the first global monetary system, rules-based, in history. It was $4.5 trillion then. This was $250, a $6 billion market cap, to 4.5 trillion as the potential TAM. Today, that would be $8.5 trillion. And I went out, I became the guinea pig for it, for ARK, right before, to make sure all the plumbing worked with GPTC at the time, and put my own personal money, and to the point where the analyst was saying, like, oh, I feel so responsible, this could go to zero. And And so it's been the best investment. And, I put down a pretty good chunk of change there. And then, of course, ARK followed very quickly at around the same price. The worst investment, probably, I felt very responsible at the time. I was at Jennison Associates, and I was that adventurous analyst who was willing to go out and look at Mexican stocks and, Chinese stocks. And the worst investment, we had loaded up on Mexican stocks. I was the prime analyst. And, I did not believe that Mexico would devalue, that because the leadership was saying they would never revalue. Well, we didn't take any of the risk off as that risk was building. And that's the worst mistake I've made, I think, in my career. And it made the difference at Jennison between outperforming the big benchmarks that year and underperforming. We underperformed. So I felt very responsible.